What is going on, guys? Ollie here. I hope everyone's had a fantastic week and made some money. Now, it's been quite a slow week in terms of the volatility. We saw some lovely impulsive moves last week and we were expecting some retracements. Despite that, though, there's been opportunities in abundance and we've managed to capitalize on some pretty decent moves. So what I'm going to do in this market breakdown is we'll look at some of the setups that we've taken and I'll break those down for you just so that you understand the reasons behind us taking the trades. And also we'll look at some opportunities going into next week just so that we can get ourselves prepared for the week ahead. So if we start off with the dollar index being a basket of 6 major currencies, and just under 60% of that makes up of Euro USD. So we can look at a nice inverse correlation between the DXY and Euro USD, which we'll get onto. But if we look at the DXY on the daily chart here, you can see that we peaked out around 99.65, and then we since had an impulsive move to the downside, breaking below this previous swing low here. Invalidating the bullish structure, you can see that price was getting squeezed in this rising wedge formation, and we simply broke below all of these levels of confluence, the daily 50 EMA, the trend line, this level of structure, and we had this nice impulsive move to the downside. So following from this move, we were expecting some form of a correction, and we're just going to analyze how deep of a correction we actually get on the DXY. I've got this level marked out here, which is the 38.2% Fibonacci, taken from the previous significant high to the current low, and that would also align nicely with the daily 50 EMA and this level of previous structure, which is at 98.25. So I'm keeping a close eye on this area here for a potential reversal and continuation to the downside. So very much a short bias in the DXY, looking for that continuation to the downside. And of course, we can translate that across to multiple dollar-related currency pairs. Now, if we have a look at Euro USD, so this is Euro USD on the daily time frame. And as you can see, after several months of making lower lows and lower highs in a very clear bearish downtrend, we finally broke above this previous swing high here, invalidating the bearish sequence, and we've now printed a new high, and therefore we've now switched our bias from short to long. So we're now simply looking for reasons to buy this currency pair. Now, as you can see, following from a very impulsive move from last week, we have since retraced, and if we drop down to the 4-hour time frame, you can see here that we're now approaching quite an interesting level. We're approaching the trend line, which again is subjective, so I'm not going to be using that as a make or break. But if we just remove that for a second, you can see that we're now approaching the 61.8% Fibonacci level and also this level of structure, which is quite a significant level for this currency pair. Now, there's no reason why we couldn't actually have a deeper retracement into the golden pocket, which is between the 61.8% and the 78.6%. So there is no reason at all why we couldn't have a deeper retracement into this sort of level and then start to see price reverse from this level for a continuation to the upside. So I'm just keeping an eye on this level here, and just to see how price action develops. If we start to see some candles of indecision and we start to see that momentum slowing down, then we can drop down to the lower time frames, the 1 hour and the 15-minute, and we can start looking for reasons to take this long. So that's what I'm looking at on Euro USD. I'm just going to go back to another index for a second. So I'm going to look at the US dollar. So the US dollar here, again, similar price action to the DXY. We had a nice impulsive move to the downside, and we've now broken below the previous low here, invalidating the bullish sequence. So again, we're only looking for reasons to sell the dollar. So the question is, where does it retrace to? Well, as you can see, price is fast approaching the 38.2% and this level of structure. So I'm keeping a close eye on this highlighted level that I've got here, which, as you can see, is quite a significant level for the US dollar. So, you can see that there has been some dollar strength for the last few days, and that's simply just the corrective phase of the US dollar currency pairs. So this just gives us even more opportunities to short these currency pairs. We need those retracements in order to enter the market at the highest probability areas. So I'd recommend just keeping an eye on this area that I've got marked out here, and just to see if we get that deceleration in price action for a potential continuation to the downside, as I say, from this level. So let's take a look at gold. Now, gold has had quite an impulsive move today. However, it's failed to break higher than this level, which is around 1520 that I've got marked out here. It's failed to break higher than this level on numerous occasions. But if we have a look at the daily time frame, you can see here that we have failed to make a new low. Now, if I just remove this fib for a second, so Price invalidated the bullish sequence here because it had taken out this previous low. It made a new lower high, it made a new lower low. We were expecting price to make a new lower low just in the bearish sequence of lower lows and lower highs. However, price has failed to do that at the moment, and you can see that the daily 50 EMA has been supporting price quite nicely, and 1485 has really held like a rock for gold. Now, as you can see, price has broken above this descending trend line, but it's failed to take out this previous high at the moment. So therefore, price is simply consolidating. We're now in a range, and we really need to break above this level here. We need to have like a full body candle closure above this area here, which is the previous swing high, in order to confirm the next direction for gold. If we break above this level and we have a full body closure above here, that will then confirm that the bearish sequence is invalidated, and then we can look for reasons to go long. Knowing that the trend has changed, then we can enter long into any positions that are presented in a more conservative manner. So if we have a look at silver, now a very similar situation to gold, and you can see that this descending trend line has now been broken. Price really struggled around this level of support and has now broken to the upside. Quite an impulsive move, followed by quite a sharp reversal here, rejecting out of the golden pocket. And again, this is kind of unclear about the next direction for this commodity. Now, if we just have a look at the daily, again, the daily, this is the previous swing high. I'm really looking for silver to breach this level here, invalidating this current bearish sequence, and then we can look for reasons to take this long. I mean, if this candle closes like this, that's quite a significant wick to the upside, and that's a strong indication that the sellers are really defending this area here. So we really have to see how this daily candle closes and then reassess the situation next week. I'm not too interested in silver at the moment. As you can see, we've been very corrective for a while, and we have had this break to the upside, followed by very sharp projections. So it's very indecisive at the moment, and I would just be sitting on my hands until we get the clear direction of where silver and gold are heading. So now let's take a look at some currency pairs. So first up is US dollar Swiss franc. Now, following from a nice impulsive move last week, again, we were expecting some form of correction, and we've seen that with all of the US dollar currency pairs. And like I already mentioned at the start of this video, we are in the corrective phase of the US dollar currency pairs. So this is simply a correction, and we should only be looking for reasons to sell this currency pair at the moment. Following from this impulsive move last week, again, we broke the bullish sequence, we broke below this trend line, we broke below the daily 50 EMA, and I'm just simply treating this as a retracement. So if we drop down to the 4-hour time frame, now you can see that price has correctively made its way into our favored region, which is the golden pocket, which is the highest probability area of a reversal. So this is the area that we should really be thinking about taking short positions on this currency pair. And this is when you drop down to the lower time frames and you start to build a case of evidence to take this short. Now, if you're familiar with our strategies, you'll understand how to capitalize on these moves and how to enter when price is within areas of high value like it is now. So this is very much on the radar, and I'm definitely looking for reasons to sell this currency pair. And the fact that we've pulled back into the golden pocket is even better. It gives us a higher risk reward. It allows us to have an even better protected stop loss, and we simply enter at a better price. So I'm definitely keeping my eye on this. Again, if we have a look at Euro USD, Euro USD and USD Swiss franc, they're heavily negatively correlated. So I am expecting some form of a reversal on Euro USD from around this level. Now, if we get that push lower, that's absolutely fine. Then again, we'll be within the golden pocket region. That simply enhances our opportunities. We enter at a better price, and we have a greater risk reward trade as well. So looking at long positions on Euro USD, looking at short positions on USD Swiss franc, and we just need to see a little bit more development there on both of those currency pairs. So let's take a quick look at GBP USD. Now, this fib here has now been completed. It has now been fulfilled. We had A into B into C. We had a beautiful rejection off the 61.8%, a huge impulsive rally to the upside, and we have now rejected the minus 61.8% final Fibonacci extension. But you can also see that we've tapped psychological key level 1.300, and we've started to reverse. So you can see we had a spinning top followed by a shooting star, and price is kind of indecisive at the moment. The pound has been up and down for the last few days. For me, there's no trade set up here at the moment. I do want to see how deep price can retrace. Now, if we just remove this Fibonacci here, and now we can fib the new leg, so we can go from A to B. Our favored setup would obviously be a retrace into the golden pocket, but I'm also not going to rule out a correction which might not be as deep. Now, we can mark out a few levels here. We've got this retest of the trend line. If we just plot on the 50% fib. Now, I'd also be looking for areas around the 50% fib. As you can see, we've got this level of market structure, which is actually 1.2600 as well. So psychological level, a retrace into this area here would be more than enough confluences for us to take a long position. And, there's still plenty of room to the upside on this particular currency pair. GA, well, GA, again, huge impulsive move to the upside. I'm actually still holding a position from here, and I'll be looking to add positions upon any retracement. Now, at the moment, you can see that we are just forming this triangular pattern, and that's simply because price is just very indecisive at the moment, and it's not really clear who's in control. So for me, I'm definitely keeping an eye on 1.8500, which is previous structure, and also is the 61.8%. I'd imagine by the time the price arrives here, we'll also have the daily 50 EMA acting as dynamic support as well. So definitely keeping an eye on 1.8500 and looking for reasons to go long on GBP AUD once we get that retracement. GJ was a setup that we also share with the community, and I liked the fact that we had this ascending channel up into the level of 141, multiple rejections of this level here, failing to make a new high. We had the intraday timeframes breaking down beautifully. We had a break and a retest of this trend line, and then we had this minor retracement into our golden pocket for a short position. Now, this was just utilizing our reversal strategy, which, if you remember, you'll be fully aware on how to capitalize on these moves. And price has since stalled around 139. So again, a little bit of power strength coming back into the market today, and I am expecting a deeper retracement. Now, if we just plot a fib from this significant low to this high, and let's just move to the daily time frame. Now, what would be most favorable is if we had a retracement into the golden pocket, because we'd have that third touch of this ascending trend line. Now, of course, I'm also aware that we might not get that deep retracement, and we also have this level of structure, which is here, which is around 135 to 136, okay? So definitely keeping an eye on this area here, and the deeper the retracement, the better the opportunity to take this long. So, as I say, keep an eye on this area between 135, 500 and 136, which is the 50%. And by the time the price gets here, we'd also have the daily 50 as well. So that's what I'm looking at for GJ, but no setup as of yet. For those that managed to get in on the reversal strategy, you should still have a position running. And again, it's just a matter of how deep you can take this. But I still think that there are a few hundred pips to the downside. And if we get that nice retracement, then we can simply look for reasons to go long. So CAD Yen, similar price action to GJ actually, but we haven't had that breakout yet. Now, following from this impulsive move, price has then started to create this ascending channel up into a level of previous resistance, which you can see here, and is really struggling around this level. Now, I do favor a retracement from here due to the nature of this price action, and I'll be looking for a retracement into around this level here to then take this long. Now, if we also have a look at US oil, we can see that US oil is also really struggling around 56.50. And following from this impulse, we've now just entered a corrective phase on US oil. We haven't quite hit the 50% fib. Oil does really like the 50% fib. I don't know why, but it just seems to react off the 50% really nicely. But, you can see that we're really stalling around this level, which means weaker oil, weaker CAD. So if we translate that back onto CAD Yen, then we are building a case of evidence for this to potentially roll over to the downside. And for all members, I think that this currency pair should be on your watch list for a potential reversal trade. And again, you'll know how to implement that and capitalize on this move if we see price action develop in the way that we want it to. So USD JPY. Now, USD JPY has been very corrective over the past week or so, and there's been no real setup here. Now, what I'm aware of is this impulsive leg here, and I've just fibbed it from this low to this high. And what we could see here is if price started to retrace from here, like so, came back up for one last touch, came back down for a third touch of this ascending trend line and the 38.2, this would be a fantastic area to take this long. And you can also see this is exactly 108 psychological level. So there's multiple confluences. If we had this pattern develop in the way that I've speculated and we did see a rejection of this level, then I would certainly be taking this long. So definitely keep an eye out on that. So US dollar CAD, ever since creating this double top rejection here, and again we had multiple rejections of this level, which is 1.3350, and also the 78.6, which on the daily time frame looks even better. But ever since rejecting this, we've had almost a 300 pip move to the downside. Now, what I'm aware of is the corrective nature. We've also got this like descending wedge, which is being created here. And price is now running out of steam by the looks of it. Now, I would expect this fib move to be fulfilled, and you can see that the minus 27% aligns beautifully with the psychological level of 1.300. So I am expecting this fib to be fulfilled, as I say, but I think that we could have some form of correction from here, possibly back to the 4-hour 50, possibly back to this level of structure that I've got marked out here. And when we do see that clear deceleration and reversal, that's when we can start building a case of evidence in the form of, plotting a fib and just monitoring price action. So I'm just sitting on my hands as currency pair at the moment because I do feel that we could see a pop to the upside here. And that's also off the back of my forecasts with CAD yen. We can see that that's really peaking out, it's running out of steam, and it does look like it wants to roll over. And again, my analysis on US oil as well. So I am expecting some form of a retrace here, and I'll be looking for reasons to take this short once we see price retrace into an area of value. So Euro Aussie, for those of you that are involved in the community, you'll know that we took a short position on this currency pair last week, and that was based off this head and shoulders pattern on the daily time frame. And we also had this rising wedge formation, which we were looking for this third touch, which also came into our favored golden pocket region. If we just fib that from A to B, you can see the price came within the golden pocket region. So a fantastic trade for myself and the community. And we had quite a nice move breaking below this trend line and the daily 50, but price has now since found support around 1.6200. Now, if we just drop down to the 4-hour, what we can see is at the moment price has failed to make a new low on the 4-hour time frame. Now, as you can see, price reversed from this level of structure, which is around 1.6200, retraced, retested the trend line to the absolute T, and also 1.6300, which is key psychological level for this pair. Some beautiful bearish price action here, and then we had a nice move to the downside. So there was quite a nice intraday move there. But as you can see again, price has rejected this level and has failed to make a new low. Now, what does this mean for this currency pair? Well, personally, I think it's best that we wait for price to break below this structure and break below this low here, confirming that there is a new leg unfolding, creating that bearish sequence, in particular on the 4-hour time frame. We've already carried out the analysis on the daily time frame, so we've identified a bearish reversal pattern in the form of a head and shoulders, and we're only looking for reasons to take this short. However, price isn't quite developing in the way that we'd like it to on the lower time frames like the 4-hour. Alternatively, what might happen here is that we actually just form a deeper correction. Now, if we have a look at AUD/USD, you can see that price has failed to make a new high on the daily time frame. Now, of course, we can see these multiple rejections around 0.6700, and we did have a really nice impulsive leg on the back end of last week, and we're now simply in the corrective phase. Now, if we just drop down to the 4-hour time frame, now today you can see that we had, again, very similar price action to Euro Aussie, where we had that nice bearish price action. We had this nice bullish price action, rejecting this level of structure here, and then we had this lovely bullish engulfing candlestick. Now, prices failed to have that momentum needed in order to push this higher, and I think this is more to do with a stronger dollar than a weaker AUD. Again, keep this level marked out on your charts because this is an area of value for us, which again, 50% fib, we've got this level of structure, and personally, I think this has got a lot of room to the upside, and I would be looking for reasons to take this long. So I'll be waiting for price action to develop a little bit more going into next week, and just to see if we get that deceleration and multiple rejections again off this level, and then we can apply one of our strategies in order to capitalize on this move. So let's also have a look at New Zealand dollar, US dollar. So similar price action to AUD/USD. Now we stalled around this level, we failed to make a new low, and we had an impulsive move broken above the daily 50, but we have failed to take out this previous swing high here, so we're still effectively within a bearish sequence. Now, having rejected 0.6200 and a break above this trend line at the daily 50 EMA, I am looking for reasons to take this long. Now, myself and the community actually took a really nice short position on this currency pair yesterday. And for those of you that are a part of the community, understand why we took this trade. Now you can see that we had this very steep counter trend line in play, which price broke. We had an evening star formation, price failed to make a new high, and then we since saw price roll over to the downside. Now you can see that we've interacted with the 38.2 and again this level of structure, very similar to AUD/USD. So I'm really keen on how price develops around this level for reasons to take this long. So I'm also aware that we could see a deeper correction into the golden pocket, but I'm also very interested in this area here because I think that we could see a deceleration and rejection from this level and potentially look for reasons to go long from this level here. So again, keep this on your watch list. We are entering a area of high value on this currency pair, so this is definitely one for next week. Now if you have a look at Euro New Zealand dollar, again, for those of you that are part of the community, we took a beautiful short position from around these highs here, and that was taken off the back of this expanding formation. We had a 1, 2, third touch of this corrective pattern, and we'd already identified that this was an area of high value for us. Following from an impulse, this was just a very overextended corrective phase. So we were naturally looking for reasons to take this short. A very aggressive entry, but when price is within these high value areas, it's always worth the risk at these levels. So this is a fantastic trade, banking us over 300 pips. And again, for those of you that are part of the community, you'll know how we entered, why we entered, and how we capitalized on this move. So again, looking for reasons to take this short. We've since had a correction, really struggling around this level here that I've got marked out. And it would be interesting to see if we actually roll over from this level. Again, if we translate that to New Zealand dollar, US dollar, then we could expect that currency pair to move to the upside from where it is, and we could expect this to move to the downside again from these levels here. So I just need to see a little bit more development. If we just move down to the 4 hour, you can see that we rejected this area. We had this beautiful shooting star candle, and I'm pretty sure that would have been a fib level. So if we just fib it from the high to the low, yeah, so you can see here, following from an impulsive move like that, the 38.2% is a reliable level, and you can see that we rejected it beautifully, and then we had a little move to the downside. We've since rejected this trend line, which give or take is reliable, but if we just remove that for a second, you can just see that now we are just very much corrective. So I'm keeping my eye on this, and I'm only looking for reasons to take this short. We failed to make a new low at the moment, very similar to Euro Aussie, but from the higher time frame perspective, I'm only looking for reasons to sell this currency pair. So I just need to see a little bit more development on this, and I'm just seeing whether or not we do get that deeper retracement. And if we do, again, it's just going to improve our risk reward anyway. So definitely keep that on your watch list. So lastly, I'm going to cover Euro Yen. So you can see that we've really stalled around this level of structure, which is around 121. Now, if we just fib the previous leg, so from A into B, so A, B into C, golden pocket reversal, amazing impulsive move up into the high. You can see that we've rejected the minus 27%, this level of structure, and also 121 psychological level. So at this point here, having identified this, we were looking for reasons to implement our reversal strategy. So if we drop down to the lower time frame, you can see that price started to stall and reverse. We can see that we had these singular wick rejections back up into this liquidity zone. And then myself and the community, we took a short position from around here, and we managed to bank a few pips to the downside. Now, due to our risk management processes, we actually would have moved our stop loss to break even to protect the position. So we would have been stopped out, but we managed to bank a few pips as price approached the 4 hour 50 EMA as our first target. Now, I do expect this to continue rolling over to the downside. As you can see, price is failing to make new highs here. And it's looking like we're going to break below the 4 hour 50 EMA. So I'm going to sit on my hands with this currency pair for now. I'm looking for a deeper retracement. If we just remove this fib here and we plot a new fib from this low to this high, and we look left, you can see that the 38.2 does align nicely with the level of 120 and this level of structure. So we've got multiple confluences around this level. So personally, I'll be looking to see how price action behaves around this level here for reasons then to take this long. So guys, there's plenty of setups going into next week. We just need to be patient and wait for price to enter those areas of high value. I'm going to round this video off here, and I hope you all have a fantastic weekend. Take care.